So failed peace talks over the weekend, yet a lot of people thought on Monday we'd see oil shoot higher. And as a result, here we are another day into the week, and investors are essentially saying, wait a second, we're going to look past this. We're optimistic about this. Stocks are erasing all their losses since the war began.
Plus, it's likely that today we close at another all-time high. I think the thing to remember is that markets and pendulums tend to overswing, and what we are seeing right now, largely driven by a lot of short covering, I think from a technical perspective, is a euphoric market that seems to have gotten the message that a 17% earnings season is extraordinary and should not be forgotten. But I think the conversation you just had and your cautious tone in how you opened with me, I think that the macro outlook is a lot more complicated than this market momentum would suggest.
Alli, what do you mean, though, specifically? Oops, sorry.
So,
I need to jump in.
Again, here we are, again, having erased all of the short, medium, and long-term anxiety and legitimate macro effects that a clear change not only in long-term regime of energy, but a short-term price shock will have. So, so although there are, and it remains, we think the bull market absolutely remains intact, and there are myriad tailwinds, there are also some headwinds that we have to be conscious of. So having, as we said, having come back to now be positive on the year and having retraced everything from this crisis it is a point in time, just like the nadir was a point in time.
But oil's 60%, still 60% higher than it was at the beginning of the year. Why is the equity market seeming to ignore that?
So again, I want to break out the fundamental from the technical.
Okay.
So the technical is that markets, from who owned them perspective, let's put retail to the side, professional money managers were underinvested and they were largely short. That was making up their gross. And so with this movement upward, they had to cover. Look at how software is outperforming, for example. That is a clear short covering message as opposed to fundamental long-term commitment.
So the point is investors were so negative because of the war on the equity that all of a sudden when things started to improve or it looked like we had some peace talks and you started to see the market run up, it was a ton of short covering. But again, markets are fickle, and we just had the banks report. Right.
And the banks reported what one would expect to see in a very volatile market, which was a 5-year high in trading revenue.
Right.
So again, there are a lot of tailwinds. We have we're expecting 11% earnings this year. Banks continue to show resilient companies, resilient individual investors, resilient consumers, but you cannot ignore a 60% rise in energy. I would say you can ignore it less or look through it less for the US than you can Europe, than you can China. So there may be some absolute tailwinds and some relative ones to the US market as well.
I think what's so challenging for a lot of people, Alli, looking at what's happening between the US and Iran, is the amount of distance between the objectives of these two different countries.
Yes.
One is about no nuclear enrichment, or maybe no nuclear enrichment for 20 years, according to the latest reporting. Mm-hmm. The other is let us enrich. How do, I just don't understand, and we're talking about this from the perspective of markets, and this is certainly, no question, a humanitarian crisis in so many different ways. But how, if the negotiations are that far apart right now, how are we even talking about some sort of resolution?
So I think that the way markets are looking at this, which may be very myopic and certainly is from a long-term infrastructure, humanitarian, and ideological perspective, is that both regimes want to negotiate. And so that in itself becomes a de-escalation and takes of the entire curve of what could happen here, best case to worst case. From a market perspective, worst case is off the table. And so that optimism in addition to short covering, in addition to earnings season, seems to be driving price action. But again, I truly believe that this momentum is masking some long and medium term economic issues.
Well, I love that you go there, and it's something that Tim and I talk a lot about because we've spent so many conversations, I feel like, over the last few months, especially with the war, but even before that, about the grab for, I keep going to this, raw materials, natural resources, supply chains that have to be secure, redundant. And I think about this with energy. Yeah, U.S. is in a good position, but the whole world is rethinking, wait a minute, I got to make sure I'm not in a tough position going forward. I feel like that is going to just drive prices higher on things because you have maybe double supply chains, or you're doing things domestically at home that, you do stuff in the U.S., it's going to cost more.
This is a continuation of a lot of trends that we've talked about with the beginning of the Trump administration and a sort of restacking of the rules of the road and the geopolitical deck. One is general self-sufficiency and security, whether that's cybersecurity, whether that's energy security. The other is the removal of the peace dividend. So I think what you are about to see in the upcoming years is a seismic shift in the way countries and companies think about energy. And so if I look at it from a short-term perspective, yes, even with the run-up, I would continue to own energy. And if I look at it from a medium...
In all its forms?
And if I look at it from a medium to long-term perspective, it makes me more bullish on solar, on nuclear, on any sort of... like everything from the fact that most of our solar paraphernalia comes from China, and so we need to rethink all of that. And so as you think about the changes of the rules in the road and how we act as the police of the world, as you think about the tariff concept, as you go back again to 2020 and 2021 and the pandemic and the necessity to have local control and ability to manipulate your own supply chain, all of those things go to increased onshoring and industrial production in this country and every other country.